Welcome to this week's edition of Money Matters, because as you know, I deeply, truly believe that money does matter. This week, I want to talk about stocks and shares, safety and property. For anyone that's watched this channel for a while, you'll know that I'm the property guy, that I believe traditional stock markets are way overvalued and I don't like them. So Warren Buffett said, and I think this is deeply true, when you buy stocks and shares, the only stocks and shares you should buy are those that, if the market was to close for 10 years, you'd be quite relaxed about it. Many people try to play the stock market. They try and time the stock market. And Warren Buffett said famously that 90% of day traders are bust within 90 days. So the people that try and buy and sell, well, they've got huge transaction costs and massive risk. So when I came here to Monaco, I'd pretty much sold all of my let's call them traditional stocks and shares. And the reason I feel so passionately about this, and I want to share it with you, is that whether you know it or not, there's a very high chance that if you've got a pension, your pension assets are being invested in the stock market. They're being invested in stocks and shares. So let's say you've got some money, either pension money, savings, whatever. And now you're thinking, well, okay, I don't want to leave it as stocks and shares. I like property. And what kind of stocks and shares are heavy into property that I could potentially invest in to build my wealth through property? For 25 years, I've been coming to Monaco more now, to watch the Grand Prix. I always like visiting the casino. I got myself to thinking one day, who owns the casino? And then outside the casino, there's a place called Casino Square. And on one side, you've got the Hotel de Paris, and on the other side, you've got the Café de Paris. And as I got more and more into Monaco life, I kept seeing these three letters, SBM. SBM this, SBM that, and I thought, well, what's this SBM thing? And it turns out that this is an organisation called Société Bain de Mer, or Société des Bains de Mer, which doesn't make a lot of sense if I translate it into English. A society for people that swim in the sea? What? What does that even mean? But it turns out SBM is a company and it owns, look at this, it owns the casino, it owns Casino Square, it owns the Hotel de Paris, it owns the Café de Paris, it owns the Fairmont, it owns it. So basically, it owns all of these top-end establishments right in the heart of Monaco, Monte Carlo. So if you don't know, Monte Carlo isn't Monaco, it's the bit in the middle of Monaco that is super expensive, even by Monaco standard. You know, the royal family and various big Monaco families that are very wealthy own SBM. But my curiosity didn't stop there. How can I buy shares in that company? Because I'd quite like to be an owner of the Café de Paris or the Hotel de Paris or the casino. Because for me, I don't know what you would think, maybe you can let me know in the comments below. If you invest in a company that owns properties like that, like, you know, the Monte Carlo casino, I believe it's fairly unlikely they're ever going to go bust. Because if Monaco continues to be attractive to the wealthiest people around the world, and indeed for many tourists to come here to enjoy the various spectacles like the tennis, like the show jumping, like, well, the Grand Prix itself. So all the reasons for which people flock to Monaco, they all use those hotels, facilities, and they're all top end, they're all luxury, and they're all been there for a very long time. So this is precisely, I believe, the type of company that Warren Buffett himself talks about when he says, if you bought shares in SBM, you could quite happily go to sleep. And even if they shut the stock market, in this case, Paris, the shares are listed in Paris, for the next 10 years, you wouldn't particularly worry about it. So therefore, I decided to invest in shares in SBM. Why am I sharing all that with you? I'm sharing it with you for a number of reasons. Number one, Warren Buffett and what he said. Number two, it is absolutely to do with property, but it's a company that owns property. So you don't invest in the property, you invest in the company that owns the property. Number three, most people wouldn't, and this is perhaps the most important, most people wouldn't even think, is it possible? They would think, oh, that's nice. But most people only know about two types of property investment. Number one, they know about the house or the flat or whatever that they live in, their home. Number two, they generally know a little bit about a buy-to-let, about rental property. So if, for instance, I take you back to 2019, which is 5 years ago now, and you look at this chart, you could have bought SBM shares for around about 45 euros a share. Current share price, as we're recording this, is 107. If you'd have bought these property-backed shares at 45 euros up to 107 euros, that's 137% return on your money. So you've almost increased it by 1.5 times, an extra 1.5 times. The value of your shares goes up. In other words, if you've paid 45 euros or 45 pence or $45 or whatever it is, they're now worth 107. So you could sell them for more than double the amount. So you could. But the second thing is that each year, as the SBM makes profit, it distributes a proportion of that profit as what's called a dividend. So not only do you get the capital growth, but just like property, you get a rental income. Oh, it's not called rent, it's called dividend. So they do all the admin, they run all the card games, they serve all the breakfasts, they do all the work. But what you as the investor get is a share of the profit because they're using your money to fund the business. And I think that's a fair exchange. And for SBM, as an example, are one of the very, very few shares that I like. Now, the challenge with SBM is that because they're such good shares, not many people sell them. So on a daily basis, there's not much volume, there's not much trade. But please don't do this. And the reason I'm giving you this warning is I would never buy more than about 5,000 euros worth of SBM shares in one day. Because if I do, the volume is so low, I'll move the price. I'm just going to keep buying in little idly-biddly bits because this is interesting. All companies have got rules. And the rules for SBM are these. If you accumulate 5% of the shares, and I'm so far off 5% as I'm stood here talking to you at the end of 2023, but I will get there. When you get 5% of the shares, you're entitled to a seat on the board. And I don't know why, but I just love the idea of being on the board of SBM, Hotel de Paris, Monte Carlo Casino. So if you could be on the board of any company in the world, which one would it be? And then go backwards from that and think, okay, well, if I want to be on the board and I want to invest in that company, how do I do that? Because that's what I've done with SBM. So most people would just go into the casino and, gamble their 100 euros. Or most people would go into the Café de Paris and have a really nice coffee and a croissant or maybe a dinner or something. Not many people, I don't think, would sit there thinking, how do I get on the board of this company? And maybe that's one of the things that we want to explore together in the next year, 2 years, 3 years. How do we alter our own mindsets? Because I'm that kid from Yorkshire. I'm that kid that was brought up in a place called Wombwell, just outside Barnsley, who left, it's a mining village, pit village, who left home at the age of 17 with 170 quid, who's now stood here in his apartment in Monaco telling you that he wants to be on the board of SBM as an investor. Now, on one level, that is completely and utterly insane. On the other level, it's completely and utterly obvious and easy. I've always thought that the hard thing in life is deciding what you want to do. The easy thing is doing it. Once you've made the decision and you're fully committed, it becomes easy after that. So, I know this is a bit of a tangent from my normal Money Matters, but I just wanted to demonstrate to you the power of buying a company that's got property instead of necessarily buying the property itself. Because the taxes, the work involved are far, far less when you buy a listed company. It's so simple. You don't even need to do it. You need the money, but then you just get somebody else to do it. And if you're thinking, well, again, Paul, what's that got to do with me? Everything. All of us can develop a mindset that says, instead of just having a cup of tea here, how do I buy the joint? Okay, so that's the first thing you could be thinking. The second thing, like I said towards the start of this video, is many of you watching this have already got a pension. And that pension, whether you know it or not, will be charging you quite a lot of money to invest your funds into various companies. Are you happy with what they're investing it into? My bet is you probably don't even know what they're investing it into. And if you want to take control of that element of your wealth creation, then please go and watch some of my other videos on private pensions, on SASs, on SIPs, on things like transfer values. I hope I've awakened some curiosity in you. And if you'd like to fill your head with 2 days worth of a different way of looking at the financial world, whether that's pensions, tax, property, advanced property strategies, well, for the next year anyway, for 2024, I'm going to be personally involved in that. The future? I don't know. Let's decide that when we get there. But for the next year at least, here's number 1 of my New Year's resolutions at the end of 2023. I'm going to be involved in wealth through property for the whole of 2024. So you want to learn more about this stuff? Look forward to seeing you there. You've been wonderful. I've been Paul. See you next time.